What's up, folks? This is Crypto with James, talking to you today about the crypto news. Before I get into that, as always, I'll update the spreadsheet. If we look at, by the way, the last 24 hours, biggest gainer, Phantom. So Phantom is currently a 448x from when I did my Udemy course on it last year. If you invest $100 into each one of these coins, when I spoke about them, these were the first 26 on the channel and the Udemy course, obviously, you would be in profit for $66,800 now. Add in your $2,600 investment, sitting on $69,400. I've held all of these at one point or another closed positions. I'm damn near all of them in profit. Not grin, look at that. That ruins the spreadsheet. That beautiful green column is ruined by just that red. And I've reinvested all that money into new cryptos. If you want to see the cryptos, I mean, check out Copy My Crypto. My holdings continue to outperform the market week in, week out. The biggest coin percentage of my portfolio are set for huge breakouts, and there's some significantly nice opportunities within this portfolio for fast turnaround profit. If you want to make these gains and build your wealth during the bull cycle, then click on the link in the description, because the moment the bear cycle hits, guys, that is where true wealth is generated. Those investments. So build your wealth before then. Okay, right. So yeah, Phantom continued to rally. Bitcoin actually held really steady, really steady. Nothing much happening there. Shiba Inu obviously retraced. That was an inevitability. It pumped so hard, so fast. There was always going to be some level of dump. To be fair, that always happens when inevitably when a coin pumps really hard, really fast. So yeah. But in interesting news then, so regarding the what's being said about crypto and stuff, there's a few bits and bobs. So we'll start with the negative news, and we'll build to the positive. Now, biggest crash in world history to destroy shares, property, gold, and Bitcoin. Act now. This is from Robert Kiyosaki. If you remember, if you don't know who he is, he wrote Rich Dad Poor Dad. He's warning that the Evergrande could trigger a global stock and property crash. Now, he said he's called the Chinese property market a house of cards that's coming down and will bring global share and property prices with it. The Evergrande group cannot pay, according to him. Valuation of properties are fake. Will real estate crash spread to the US? Yes, he believes. He even suggested that this could happen this month. October has seen plenty of stock crashes over time, including the Wall Street crash of 1929 and Black Monday 1987. So are we on course for another one? Basically what it said is stagflation, along with supply chain bottlenecks, labor shortages, Chinese property, and tapering down central bank stimulus are serious threats. He said that, and obviously top US stocks have plunged, Apple, Amazon, and Facebook, with the S&P 500 actually down in 5.2% since hitting the all-time high in early September. Markets are already deflating, particularly in Japan. Now, one thing I'll say, I agree. I don't believe necessarily that the Evergrande is necessarily the thing that's going to trigger it all. I think if you actually look at the S&P 500, valuation of those stocks is staggering. Many of those companies produced nothing for a year during the pandemic, right? This nonsense year that we've had, where everyone was just stuck in their houses. And the only companies that actually really continued to thrive was Amazon, was Facebook. Your social networks thrived, Amazon thrived. A lot of bloody companies produced less than they've ever produced, had less profits than they've ever produced, but somehow the valuations of many of those companies increased in value during a year where they produced little to nothing. So there has to be a correction within the stock market. That's an inevitability. Now, when that happens is hard to predict. He's talking about it this month, but I'm sure he's probably in the process of hyping a book at this point. So it's probably that he's getting some clickbait. And to be fair, I've covered it. But that is on the cards. There's going to be an enormous crash in the stock market, or potentially the property market. You can't dispute that the Chinese property market is effectively a house of cards at the moment, and that will have fairly severe repercussions. But one thing to bear in mind now, gold's always been the safe haven, and institutions are buying Bitcoin rather than gold. JP Morgan has said this. This week's rally has been driven by institutional investors hedging against inflation with Bitcoin. Now, that's always been the purpose of gold, effectively a store of value to hedge against inflation. However, with obviously the price rises, Bitcoin's price has risen faster than gold will, and will rise faster than gold will. It will also correct harder and deeper than gold will. But obviously, institutions are realizing that certainly in the short term, and to be fair, in the long term, Bitcoin is far better in terms of a long-term investment. Michael Saylor threw out the JP Morgan statement in a tweet as well. The implicit endorsement of Bitcoin by major banks and regulators is going to accelerate the collapse of gold and the rise of Bitcoin as the preferred safe haven store of value for both institutional and retail investors. Gold is in collapse. That's a bit of a nonsense statement. Look, Bitcoin, I do think Bitcoin will ramp up as a result of institutions, but there's no way gold's ever going to collapse. JP Morgan provided two other factors behind the rally. The reassurances by US policymakers that there's no intention to ban usage or mining of crypto, as well as the recent rise of the Lightning Network and second layer payment solution helped by El Salvador's Bitcoin adoption. And the El Salvador thing, a lot of people played down. I pointed out how that was probably the biggest news crypto's ever had. Almost certainly it was, and JP Morgan are talking about it a bit as well. But yeah, so institutions. So if there is a global collapse, or if the dollar starts collapsing, we might see more institutions going for Bitcoin rather than gold, because they also know, because they're not idiots, they know that the crypto market is cyclical, and after the next, even when we hit a bear market, which we will, whether it's the back end of this year, like December, or the beginning of next year, but we'll hit a bear market. But when that happens, institutions have done their research. They'll know that after the next Bitcoin halving, there'll be another rally in price. We know this. So they'll have the long-term view on it. Crypto analyst Benjamin Cowan has said that he believes ADA will make a run to $22.50. Well, no, he said he anticipates it a lull after ADA made its run to $2.50. But he believes there's going to be another breakout. So what he's suggesting is, when I think about how long this reaccumulation phase last, if I had to dubiously speculate, I would say the move to a new paradigm shift in what it means to hold one ADA would probably start somewhere in this region, somewhere between mid-November until mid-March. Before ADA can go on another rally, he stresses that Bitcoin needs to continue holding the line on the 20-week moving average. He speculates that November could be the month that Cardano actually breaks out. So we will see if he's right on that. And finally, another nice bit of news: Republicans going after Gary Gensler again. Minnesota Republican Tom Emmer said that Gary Gensler and the agency need to lay off the crypto space in an interview he had with the Financial Times. Emmer said that he sharply disagreed with Gensler's approach to regulating crypto. All regulators want more jurisdiction, but I think Gary Gensler's vision is much broader, and frankly, because of it, he's having a negative impact and potentially will have a really big negative impact on retail investors and opportunities out there that entrepreneurs and innovators might provide. he's, obviously we know Gensler's going after crypto, trying to tame the Wild West of crypto. But yeah, Emma said that he believes the vast majority of crypto offerings or related offerings are actually currencies or commodities. The SEC is not involved. If the SEC were to deem one of these coins a security, the value of the token would plummet, and those retail investors would be seriously hurt. That's directly the opposite of his mission and his authority. I'm concerned that the initial reaction of a regulator is always to say, I want to grab hold of this and make it like the markets I already regulate. I'm not sure that's going to be great for innovation. Couldn't agree more. But regulation will come. But it will come in a different shape and form to what we see within the traditional financial markets. Because it has to. It's a different system. It's a different structure. It's a structure that can assure supply chains, like we see with VeChain. It's a structure that can provide people with opportunities to actually earn a living online, whether through DeFi. It's a structure that when NFTs are more broad than they are now, you will have contracts that are NFTs, mortgage contracts, crazy things like that. The innovations within crypto are astounding, and the room for growth in terms of innovations is limitless. We could, we'll see houses being bought via NFTs. We'll see mortgages. We'll see contracts all written and designed through an NFT type situation. We'll have blockchains that can verify a person's identity. I don't necessarily like that, but that is an inevitability of the way we're moving towards a more digital life. A lot of these blockchains will secure smart cities down the line, which again, is something I'm not a big fan of at all. But the innovations within blockchain, the cryptocurrencies associated with those blockchains, are going to be the things that drive the technology forward. So it can't be regulated in the same way. And trying to define these things as securities does not only hamper the price action of a coin, but it hampers the interest of people. Because if I know I'm now in a security and I'm now regulated by a different set of rules, and I believe the price action is going to completely be affected by this, why would I invest? When I know I can go into another crypto that isn't a security, that has true potential, that could run well. Madness. But yeah, but I like this. Good news. It's good to see a Republican going off. Like, it's good to see any politician at the moment, particularly in America, pointing out the sort of stupidity of the approach of Gensler. It's good to see people the institutions are now moving away from gold into Bitcoin. And while the Robert Kiyosaki news is a bit clickbaity, fear-mongering, I don't disagree with them. There is a crash coming. I don't know if it'll be the biggest. I think he's been using a bit of hyperbole there. And I don't necessarily believe it's going to be the biggest crash of all time. There is a crash coming there. There just is. Too many of the stocks are well overpriced. And to be fair, China's housing market is a house of cards. But right now, I don't think there's necessarily a cause for concern this month. But I think within 6 months or so, we will see that crash. Anyway, that's it from me. Hope you're all keeping well. If you're new to crypto, check out Copy My Crypto. It's where I share my portfolio I've built to maximize gains during this bull cycle. Bear in mind as well, I was the only one on anywhere that I know that talked about best investment of the year, did a whole course on it, and it is currently 448 times in value. I know a lot of YouTubers do videos going, this is going to be the best investment of the year, this is going to be, but when you've done 15 of them, it sort of loses value. I've done one, and I was right. And my holdings are continuously outperforming the market. And if you want to make the gains before the bear cycle, now is the time to click the link in the description and check it out. Bye, guys.